Let us test the definition of revenue. Are the following transactions revenue? Here is the example. Borrowed $3,000 from the ANZ Bank, so we took out a loan, $3,000 from the bank. Let's just remember what the definition of revenue is: an increase in assets or a decrease in liabilities that leads to an increase in owner's equity, excluding capital contributions. Well, certainly assets have gone up by $3,000, cash assets up $3,000, but there's been an increase in liabilities, not owner's equity, because the business has to repay this $3,000. It's a liability, so it doesn't meet the definition of revenue, because even though it's an increase in assets, it does not lead to an increase in owner's equity. It does not meet the definition of revenue. Let's check out another example. Does this transaction meet the definition of revenue? Capital contribution of $5,000 cash. The owner has injected $5,000 cash into the business. Assets have gone up by $5,000, so it meets the first part of the definition. There is an increase in assets. And there is an increase in owner's equity, $5,000. However, the $5,000 increase is due to a capital contribution, and the definition of revenue excludes capital contributions. So even though owner's equity goes up, it is not a revenue transaction. Let's look at another example. Interest revenue $800. An example would be where the business has put aside surplus cash resources and received interest on those cash resources. It's received interest of $800. It leads to an increase in cash $800, yes, so that part of the definition has been met. And it also leads to an increase in owner's equity due to this revenue activity. So it does meet the definition of revenue. That is, an increase in assets, yes, which leads to an increase in owner's equity, yes. Is it a capital contribution? No. Hence, it does meet all the requirements of the definition of revenue. Let's consider GST. Let's assume that the business has collected $400 GST. Is that cash inflow, $400 due to GST, is that a revenue item? Well, cash has certainly increased by $400 because the business has received $400 cash. So part of the definition has been met. It is an increase in assets. But the increase in the GST, or the cash inflow, leads to an increase in the liability, because the business has to eventually remit the GST to the Australian Taxation Office. It's a liability. Owner's equity is not affected by the transaction, hence it cannot be a revenue transaction. Owner's equity doesn't go up, hence it is not a revenue type of transaction. Here are some examples of common revenue names or titles in a service type business. Perhaps the most common one will be takings. Takings, what the business takes from its revenue activities. Or fees, or service fees, or interest revenue we just had a look at. Income is a possibility. Discount revenue, fees revenue, and specific ones that relate to the business: painting fees, architectural fees, dental fees, depending on the type of business. The business can call its revenue whatever it wants to call its revenue, but perhaps the most common one we'll see is takings or fees or service fees. So in summary, revenue contributes to profit. Profit belongs to the owner. Profit will work to increase owner's equity. So the revenue activity in this business is consulting fees, $10,000. That contributes to the profit, in this case $4,100. Profit belongs to the owner. Profit increases owner's equity. Increase revenue, increase profit. Decrease revenue, decrease profit. And just remember, of course, the definition of revenue, which will be an increase in an asset or a decrease in a liability, which leads to an increase in owner's equity, excluding capital contributions. That's the end of the video.